Secretary of the branch, Anirban Paul, and MC members, past chairman, and my senior professional colleagues, and all ladies and gentlemen, and all chartered accountants of the Visakhapatnam branch. A very good evening to all of you. Really, today we are very fortunate to get the appointment of Rahul Jindal ji. He is very expert. He is having knowledge in this specialization of the forensic accounting and the detection of the fraud. Today he will give us the intricacies of the forensic accounting and auditing and their detection in a detailed manner. My dear friends, specialization in the area of forensic accounting and fraud detection is more in demand in view of the increased incidence of the fraud and cyber crimes. Forensic accountants with their core understanding of accounting, finances, and laws with the added knowledge of investigative techniques will be able to determine whether the activity is illegal or not. Forensic accounting and fraud detection involves practice of utilizing accounting, auditing, and CAD's data mining tools and investigative skills to detect frauds and mistakes. All the government bodies, public sector undertakings, insurance sector, banks, investigating agencies, as well as many medium-sized and boutique firms also have specialist forensic accounting departments engaging forensic auditors. The forensic accountants usually investigate and analyze the financial evidence, develop computerized applications to assist in presentation and analysis of the evidence presented, communicate their findings in the form of various reports, and assist in the legal proceedings in court of law in expert witness. Recently, it has come to light due to rapid increase in financial frauds and white-collar crimes. The investigation of the accounting, auditing, and investigation skills creates the specialty known as forensic accounting. The forensic means suitable for you in the court of law and is to that standard and potential outcome of the forensic accountants generally have to work in detail, auditing, investigative skills to conduct investigations and thefts and fraud cases. No doubt forensic accounting is listed among the top 20 careers of the future because our ICA also has listed this forensic accounting and auditing is having a bright future. The job of forensic accountants is to catch the perpetrators of the financial theft and fraud occurring throughout the world every year. This includes tracing money, laundering, and identify theft activities as well as tax evasions. Forensic accountants will be in high demand because of the increase in the employee and management fraud, theft, embezzlement, and other financial crimes. Growth is also fueled with the high visibility of the corporate scandals. The Bureau of Labor Statistics, USA, has predicted 13% of the job growth for accountants and auditors by 22 to 23. The growth of all forensic accounting jobs should be correspond with the rate, if not exceed it, due to the increasing financial regulations, with some estimates predicting of 20% growth in demand for the investigative auditors. Because you all know that our city police commissioner also recently has given a statement that any in the city also the cyber security audits are having a lot of importance because any industry that values their core data and its privacy needs to be regularly carried out these forensic audits, as it will only help them safeguard their data. Because the City Police Commission also feeling that the cyber crimes are increasing day by day. That too, it needs this fraud detecting, because just like foreign audit, forensic audit is very much useful to protect their data. Because otherwise, because of these frauds, these all thefts will increase, and there is a loss of economy to the all public sector undertaking, not only public sector, even corporates also. Because to discuss and the intricacies of the finance, this forensic auditing and accounting fully be discussed by today's our Rahul Jindal ji in a detailed manner, and I will also will give the practical cases how to catch hold of these frauds, etc., to enable us to our audit in a better manner. So Rahul Jindal ji, now before go take up the class, I request our Anwar Sridhar Garu. Sridhar.
Sir.
To introduce this today's speaker.
Good evening, members. It's my privilege to introduce CA Rahul Jindal ji for this today's evening seminar on the forensic audit and fraud detection core aspects. CA Rahul Jindal ji is a qualified chartered accountant with LLB, DISA, and he is also certified fraud examiner, certified forensic auditor, IBBA registered evaluator, and he is also a certified concurrent audit of banks. And he also had diploma in IFRS. Rahul Jindal is a forensic audit expert and has handled many assignments which are valuing in total more than 35,000 crores of forensic audits for public sector banks, private sector banks, BSC, and many other financial institutions. He has taken up various seminars for various institutes such as NIRC of ICA, Bank of India, Economic Offences Wing, NIRC study circles, WIRC study circles, so on and so forth. With these few words, I introduce C. Rahul Jindal ji to the August Gallery. Over to Chairman, sir.
So now I request Rahul Jindal ji to take up this session, sir.
Thank you, Chairman, sir. First of all, I'd like to thank Visakhapatnam branch for giving me this opportunity so that I can discuss some practical overviews. The seminar will be completely practical. I'll discuss the various cases that I've dealt with while doing forensic audit, how you deal with CBI, how you deal with ED, and what is the practical scenario that is happening around. Like I'll say that chartered accountants are being made a scapegoat. Whereby if you see any big fraud has happened, first of all, they'll say what CA has done. So I'll try to discuss all those points, that what is the risk and responsibility as an auditor that you have, and what are the precautions that you have to take while signing any balance sheet or while giving any certificate. In today's scenario, you have to be extra cautious while doing any audit you are doing, whether it be concurrent audit, stock audit, or statutory audit, internal audit, whatever audit you are doing. You have to be extra sure while you're doing any audit. We are undertaking any audit. The last resort is forensic audit. So if you are doing your work as a statutory auditor, stock auditor, or as a concurrent auditor, or as an internal auditor perfectly, then there is no issue. No one can question you in future if the account is classified as a fraud or whatever the case may be. So before identifying, just Chairman sir told, that so many frauds are happening nowadays. You will see the newspaper that 10,000 crores of fraud has happened, 20,000, like ABG Shipyard. They are saying that the fraud of 22,000 crores have happened. But you need to understand, ultimately, the borrower had some assets. He has the ships, he has the land and building, he has that area. So what the media does, they hype the amount. They show it as a very large amount, that the fraud is 20,000 crores, 25,000 crores is a fraud. But you need to understand that half of such amount is pertaining to the interest amount, the interest on such amount, principal amount, and half of that principal will be in form of fixed assets that the bank have charged on. So ultimately, the amount that the bank are not able to recover will be around 3,000 to 4,000 crores. But the media shows that at 22,000 crores. And then the first scapegoat that is made is a chartered accountant, is the statutory auditor, what they were doing. If the account is classified as a fraud, then why did not the statutory auditor bring that fact in his report? To mitigate that fact, the government has also amended the CARO reporting. If you would have seen that from 1st April 22 onwards, April 21 onwards, the CARO reporting has been changed. So then you will be auditing your all the clients in March 22 as per the new CARO that has been published. So you will be giving your report according to the new CARO, and various amendments have been made in CARO. These amendments, majority have been taken from the circular of forensic audit. If you see the RBI master circular, they have defined diversion of funds, they have defined fraudulent transactions, they have defined siphoning of funds. All those things have now been brought into your statutory audit report itself. Like now you have to comment whether there were any diversion of funds or not, whether the funds have been utilized for the purpose for which they were sanctioned, whether any fraudulent transactions have been undertaken, whether there is any Benami transaction that has been undertaken. So all those points have now been incorporated in your statutory audit report itself. Hence, it is very important that from now onwards, from March 22 onwards, you have to be extra cautious while writing anything in your statutory audit report. Like one of the points I'll tell you, in CARO reporting, now you have to state whether the stock statement tallies with the books of accounts or not. Prior to that, only the management was signing the stock statement and giving it to the banks. But now, as a statutory auditor, you have to comment whether the stock statement tallies with the books of accounts or not, which according to me casts a huge responsibility. I'll tell you the reason for that. As per the RBI Master Circular, in the definition of fraud while doing forensic audit, the first point is overstatement of stock statement is considered as fraud. This is the first point of definition of fraud as per RBI Master Circular. So if in your statutory audit report, you're not writing about the stock statement, overstatement or anything, then you will be liable before the government agencies. You will be liable before CBI, EOW, SFIO, ED, every government department if you do not provide your reports properly. So first and foremost, you have to be extra cautious. You have to read the the latest CARO amended 2020 thoroughly, and you have to reply to each and every point while finalizing a report. Please do not leave any point unchecked or unverified, because that will be a huge liability on you, I'll tell you. Like I do a lot of forensic audits. What happens? I'll tell you a brief scenario why forensic audit is done. Then we'll come to the topic. I'll tell you what was the background of forensic audit and what is happening in today's scenario. So in around 2015-16, RBI came out with a circular that they asked the banks to identify whether the NPA accounts above 50 crores are fraud or not fraud account. RBI asked the banks to provide a list of accounts above 50 crores as to whether they are a fraud account or a no fraud account, the NPA accounts. In turn, what the banks did, banks appointed CA firms. So in initial 2016, the banks identified 39 firms all over India to undertake forensic audit. So I was one of them. So they identified 39 firms to undertake forensic audit. The banks gave us a scope of work, which I'll discuss with you thoroughly and with proper practical case studies. They gave a scope of around 10 to 15 points, in which you have to identify, you have to comment whether those points have been followed by the borrower or not. Once you are able to verify those points, then you have to conclude whether it is a fraud or a no fraud account. If you conclude it as a no fraud account, then bank will classify it as a no fraud account. If you conclude it as a fraud account, then what happens? Then the banks have to refer it to RBI. They will provide a list. They provide a quarterly submission to RBI, whereby they will state that this account has been classified as a fraud account. Secondly, the banks will be filing a complaint with Central Bureau of Investigation, CBI, stating that this account has been classified as a fraud account. Hence, you are requested to file a charge sheet against such a complaint. You are requested to file an FIR against such party borrower. What will happen as soon as the complaint reaches CBI? What will they do? They will start investigating the matter. They will call the forensic auditor. They will call the borrower. They will call the bankers. They will call the statutory auditor. They will call the stock auditors. They will call the concurrent auditors, internal auditors. They will call everyone. So for an example, if in my forensic audit report, I write that the stock was inflated, the closing stock has been inflated by the borrowers and which has been written off as soon as the account was classified as an NPA. Now what will happen? Now the CBI official will call the statutory auditor. That said, the forensic auditor has written that the stock was inflated. Then how have you verified the stock and signed the balance sheet? In that case, as a statutory auditor, you have to produce your working documents before the CBI official that how have you verified the closing stock. I'll give you a second example. For an example, I write that the debtors, the trade receivables, they are fictitious, they are non-recoverable, or only fictitious sales have been booked just to create fake debtors. I've written in my forensic audit report. Now, the CBI official will call you as a statutory auditor to prove that how did you verify the trade receivables. You cannot take a plea that we have relied on management representation letter. That is not allowed. You have to send confirmations on sample basis to some of the debtors, and you have to see whether you receive confirmation or not. If you do not receive the confirmation, you have to provide a disclaimer in your notes to accounts or your audit report that the confirmation has not been received by us. So all these things, so if the debtors are fictitious, it means the sales is fictitious. If sales is fictitious, it means you have to check all the sales and purchase documents along with the supporting documents. Again, the supporting documents of sales and purchase vary from industry to industry, which I'll discuss when I'll come to the scope of work. The documentation for a trading concern will be different to what is documentation for a service industry, documentation for a manufacturing industry, documentation for a rice industry, documentation for a jewelry industry. So all those documentation will be separate. You cannot have a single checklist of documents that will be required by you. Each and every industry has a separate documentation that needs to be maintained. Like if I talk about jewelry industry, there is no transportation of goods, even though the value of good is high, but you will not find any transportation of good, bilty, whereby truck number or scooter number is written, because jewelry is an item which is sent by hand or the customer purchases it on the shop. So you will not find any transportation documents. If you are into a manufacturing industry, what you will find? You will find the manufacturing record. You will find the cost audit records. You will find the manufacturing, the conversion record. The power and electricity bill will be high. But if you are into a trading industry, you will find the inflow and outflow of goods. You will find the good receipt note. You will find the good dispatch note. You will find the transportation documents. So all those things will be there. So it will be dependent. The documentation required will be dependent on the industry that you're auditing. So I'll just share my screen. I've given you a brief overview that for why forensic audit was to be done, what is to be done, and what will happen once you do a forensic audit. Now I will come to, I'll share my screen and then we can start the slide. So what we will discuss? We'll discuss financial fraud and role of professionally in investigating frauds. This is our main scope. My screen is visible, sir?
Yes, sir.
Okay, sir. So first and foremost, before undertaking forensic audit, you need to understand what is fraud. Like I have told you, that the banks give forensic audit in order to identify whether any fraud has been undertaken or not. In order to identify fraud, you have to understand what is fraud. What is the definition of fraud? Sir, fraud has been defined under various acts, Indian Penal Code, Companies Act, RBI circular, everywhere. But for the ease of understanding, I'll tell you what is fraud. Any act which has been done intentionally to deceive someone is fraud. अगर मैं इसको हिंदी में कहूँ, जानबूझ के धोखा देना. This is the only definition that you need to understand. You can read any definition under Indian Penal Code, Companies Act, RBI, or IBC code, anywhere you can read. Any act which is done intentionally to deceive someone is fraud. The main focus is intentional. It should be an intentional fraud, intentional act. If anything has been done intentionally to deceive, then it is a fraud. Why I'm telling you this? In many cases, when you will be undertaking forensic audit, what will happen? Like it happens in many of my cases. The banks approach me and they tell me, sir, we are not getting any recovery in this account. Please classify this account as a fraud account. Never do that. You are not dependent on whether the banks are able to recover anything from the borrower or not. Let me tell you. Reason being, If you classify any account as fraud without any proper justification or reasoning, then what can happen? The borrower can file a defamation case against you. He can take you to the court that I have been classified as fraud without any conclusive evidences. So the main thing is, an act should have been done intentionally. If it has not been done intentionally and it is a genuine business loss, then you cannot classify that account as a fraud. Now, how will you differentiate between an act, what is an intentional and what is an unintentional act? Because as a chartered accountant, you cannot go into the minds of borrower to identify that this has been done intentionally or this has been done unintentionally. For that, there is a checklist of points that are given by the banks. Banks give us a scope of 10 to 15 points in order to identify that whether any fraudulent transactions have been undertaken or not. Let me give you an example of an intentional act and an unintentional act. First, I'll tell you about an unintentional act. What is an unintentional act? Sir, if you have an understanding of the solar industry, the solar power generation industry, what was happening during the period of 2005, 2006, 2007? The per unit rate of electricity was 18 rupees, 19 rupees per unit, at which the PPAs were being signed, power purchase agreements were being signed. It was 17 to 18 rupees per unit I'm talking about during the period of 2005, 6, 7. Now what happens? I, as a promoter, I go to the bank that I want to set up a power plant, solar power plant at a costing of 1 crore rupees with a projection that I will be earning 18 rupees per unit. By selling the electricity, by setting up a power plant of 1000 crores, I'll be earning 18 rupees per unit. In this 18 rupees per unit, my fixed cost will be 5 rupees. My variable cost will be 7 rupees and I will be earning 6 rupees per unit. So my total costing will be 12 rupees. 5 is the fixed cost, 7 is the variable cost and 6 is my profit. So I make a projection, I go to the banks lend me loan of 800 crores and 200 crores is my promoter contribution. So the banks lend me 800 crores with a projection of 18 rupees that I'll be earning per unit. Now what happened during the period of 11, 12, 13? The government went into reverse bidding. The government told you tell us that at what is the cheapest rate at which you can provide us the electricity. They did reverse bidding. So many companies, they came, sir, we'll provide at 16 rupees, we'll provide at 14 rupees, we'll provide at 12 rupees. This was open for the companies outside India as well. That companies from China, the companies from Japan, they came Singapore, sir, we'll provide at 10 rupees, we'll provide at 6 rupees, we'll provide at 5 rupees. Today, the rate is around 3 rupees per unit. The per unit rate of electricity is 3 rupees per unit. In that case, now you think me as a borrower, I have taken 1000 crores with a projection of 18 rupees, fixed cost of 5 rupees and variable cost of 7 rupees. But what I'm earning today, I'm earning 3 rupees. Then how do you expect me to repay the loan? I will ultimately be classified as an NP account. But this is a case of a genuine business loss due to change in government policies. This you cannot classify as any intentional act. This is an unintentional act which was not in the hands of the borrower. Hence, this account can never be classified as a fraud account. Even if the bank are not able to recover even a single penny. This account should never be classified as fraud account because he was not able to repay, he did not have the capacity to pay, reason being the change in government policies. Let me give you an example of an intentional act. Suppose for an example, there is a company which is dealing in rice. The company has sold goods to various parties and the company has a limit of around 450 crores. It has an outstanding debtors of 500 crore rupees. The company has an outstanding debtors of 500 crore rupees and outstanding liabilities 450 crores. Now, what will happen in that case? In that case, what will happen if I was in the place of the borrower? What will I do? I will send legal notices to the debtors. I will file case against them in the court. I will file case against them in IBC, insolvency, bankruptcy. I'll try to recover my funds from these debtors so that I can repay the banks. Now, in one of the cases, what the borrower said, sir, we are trying to recover the money. However, the debtors are not paying us. What can we do? He had an outstanding of 500 crores of debtors and not even a single penny was being recovered for past 2.5, 3 years. and the debtor did not take any legal action against any of the borrower did not take any legal action against any of the debtors to recover such money. This clearly shows that his intention was malified, because if it was in a normal course of business, I would have tried to recover that money from my debtors and repay the bankers. But what I did not follow up with my debtors, 100% of debtors were outstanding, 500 crores, but still I did not follow up with any of them to recover such money. This clearly shows he has intentionally booked fake sales, intentionally overstated his debtors, and he has, with malified intention, deceived the banks by overstating his debtors. There can be various examples. I will discuss with you various examples that are there of intentionally making such things. So what you have to do is, you have to put yourself into the shoes of the borrowers. That if I was in the place of borrower, what would I have done? If in my books 500 crores of debtors were outstanding, I will try to recover as much money as I can. I'll file legal case, I'll go to court, I'll file in IBC, whatever I can do, I will do to recover such money. But if you are not taking even a single action against any of them, this clearly shows your malified intention. And you can safely classify the account as fraud, stating that since no effective legal steps have been taken, which questions the, I'm telling you the language that is to be written in the reports. Since no effective legal steps have been taken to recover such money, hence this questions the genuineness of sales and purchases and outstanding debtors being shown by the management. Thereby, this creates a suspicion of diversion and siphoning of funds and may be classified as fraud as per the RBI Master Circular. This is the language, this is the general language that I have told you. This is the language that is to be written. Because now you have to conclude in your report whether it falls under the definition of fraud as per RBI Master Circular or not. I hope this point is clear regarding fraud. So ultimately, like I'll show you the definition of fraud. This is the definition as per Companies Act. Any act by any person with an intent to deceive against the interest of the company. You read the bold part. Any act by any person with an intent to deceive against the interest of the company is fraud. Again, the key essence is proving the intent is the key. Again, you have to prove that the intention was malified. Once you are able to prove that the intention is malified, you can clearly write that it is a fraud account. There's no issue in that. But you have to be sure you should have working documents, you should have conclusive evidences with you before classifying any account as fraud account. Now, if you would have attended the certificate course on forensic audit, fraud detection, you would have learned about fraud triangle. I'll give you a brief overview of this. Any fraud that is undertaken, it will fall under any of these three categories. Whether there will be an opportunity, there will be a rationalization, or there will be a motivation. Now, what do you mean by that? I'll give you an example. Like the Satyam fraud happened. Why did the Satyam fraud happen? Because there was an opportunity. How? The top management was involved in the fraud. And the opportunity is always with the top management to undertake any fraud. Nirav Modi, opportunity, because he was at the top management. And the PNB official who assisted Nirav Modi, motivation, because he wanted to earn quick money. So anything you will see, any fraud that we will see, it will fall under any of these three categories of fraud triangle, whether there will be an opportunity, there will be a motivation, or there will be a rationalization. Rationalization means you're trying to justify your act. You're trying to justify that what act I have done is legal and it is allowed, even though it is an illegal act and a fraud act. So you're trying to justify your act. So any fraud, I'll give you a simple example. If you are working in your office and you are taking private printouts, you're not taking printouts of your office, but you're taking private printouts for your home, that is fraud. But you will try to justify it, you will try to rationalize, ki, sir, this is my right to take out printouts. I'm giving a very, very small example. So if you are sitting in your office, you are taking personal private printouts, that is fraud as per fraud triangle. But you will try to rationalize, you will try to justify that it is my right to take out printout because it is my printer. So any act which is done intentionally, it is falling under any of these three categories will be classified as fraud. You would have any of these reasons, whether there will be opportunity, motivation, or rationalization, any of these three things. This is a differentiation between a statutory audit and forensic audit. Statutory audit is done prior to signing of the balance sheet, whereas forensic audit is always done for prior periods. It can be 3 years, it can be 5 years, it can be 10 years, it can be 20 years, whatever period is given by the financial institutions to you. So forensic audit is always done after the account, after the balance sheets have been signed. While doing statutory audit, you do not have any assumption of fraud. You will say that everything is fine. But while doing a forensic audit, you have to assume that fraud has been undertaken. Reason being, there is a loss of public money. So while undertaking any forensic audit, you have to believe that fraud has been undertaken. The purpose of statutory audit is for readers in reaching a financial decision, like investors, bankers, shareholders, so that they can decide whether to invest in this company or not. Whereas the purpose of forensic audit is to reach a legal decision, whether the account is to be classified as a fraud account or not, or what legal remedies are to be taken. In statutory audit, you determine the stewardship of directors, that where they are taking the company. Whereas in forensic audit, you have to identify the perpetrator, the culprits. You have to identify who undertook such fraud, the directors, KMPs, employees, who undertook such fraud. I'll tell you, recently the banks have started a procedure whereby the forensic auditor is given a scope of work. He has to identify what was the role of statutory auditor in case the account is classified as a fraud. That is a separate scope of work that is being given by the banks now. I received it for 3 or 4 assignments right now, whereby I have to comment that this account, that a company has been classified as a fraud account. Please tell us what was the role of statutory auditor, what was the role of stock auditor in such fraud happening in the company. Now they are appointing separate agencies to identify that, to identify the role of statutory auditor. That's why I'm saying that the responsibility of statutory auditor has increased multifold now. And please sign the balance sheet if you are extra sure that everything is correct and fine in the balance sheet. So today we are going to discuss about financial statement fraud. I'll directly come to the scope of work. So this is a scope of work that is there. If at the end we have time, I will discuss the scope of work for the transaction audit under Insolvency Bankruptcy Code as well. First, I will discuss about the scope of work that is given under forensic audit by the banks. And along with that, I will discuss practical case studies with you as well. Then, if we get time, I will discuss about the 4 sections under Insolvency Bankruptcy Code which pertains to the transaction audit as well. If you have any queries till now, we can take the queries, or we can start with the scope of work.
Members, if you are having any queries, please unmute yourself and ask.
Okay, sir.
Members, if you are having any queries, please unmute yourself and ask the query, sir.
Hello.
Yes, sir.
Hello, sir. I have a doubt. Like when we are doing it, when we started the audit, so how the management representation letters are going to save us? Whether we can rely on them and certify them, or how it is?
So management representation letter will only provide you one level of security, nothing else. But if you would have seen the latest CARO, the management representation letter won't be saving you any longer, because you have to completely state on each and everything. You have to state whether the stock statement tallies with the books of accounts or not. You have to verify the physical verification report of inventory and fixed assets. So you have to comment on each and everything now. So the management representation letter can be taken, but it will be only one of the documents and nothing else. You have to verify the debtors, you have to verify the stock, you have to verify fixed assets, you have to verify the loans and advances. If you would have seen the clause number 3, whereby you have to state whether any loans and advances are prejudicial to the interest of the company, the asset side. You have to comment whether these are loans are in form of, basically they want to ask whether it is an entry or an actual loan that has been given by them.
Yeah, correct. Mhm.
You have to comment on all these points now. So MRL will only be one of the documents, but the scope of work has increased multifold now. You will have to check the agreements of the loans and advances given. You have to write whether the loans and whether any repayment is due and not taken. In that case, why the account has not been classified as an NPA. So all those things are to be studied now of the balance sheet. MRL cannot be a justification now in today's scenario whereby the government agencies are calling all the chartered accountants. So having only MRL will not suffice, sir.
Sir, when we do not have any conclusive evidence, like say, if you see the loan agreement, it is fine, but they have internally colluded and done some kind of fraud, even after verifying and all. So if we do not have any conclusive evidence, so what is our situation? I mean, what we should do then? Like, do we have to comment it in the audit report and or
Sir,
how we can save it?
Sir, if they are not providing you loan agreements, you provide a disclaimer in an audit report. If you, in the clause number 3, you clearly write that loans have been given. However, the written rent agreements, loan agreements have not been made available to us. Hence, we are unable to verify and comment on the terms of such repayment of loan. Further, if they are outstanding like for more than 90 days or 180 days, then at least they should have a term, the time period of repayment. If they do not have any time period of repayment, because under CARO, in the guidance note of CARO itself, they have given 4 subsections, which will help you to identify whether any loan given is prejudicial. Like they have given that to adjust the outstanding loans, new loans have been given. That is called evergreening as per RBI circular. Secondly, if the repayment schedule has not been mentioned, then it is prejudicial. Thirdly, if the amount is not being recovered and no legal steps have been taken to, reasonable steps have been taken to recover such money, then it is prejudicial. So now you have to verify each and everything. And if you are not able to get anything, then you have to give a disclaimer in your report. Like
Okay,
one of the clauses, you have to comment whether the internal audit report has any adverse comments or not. Then you have to verify the internal audit reports as well. You cannot take a plea that they were not made available to us. In case they are not made available, you have to qualify a report that internal audit report was not made available to us. Hence, you are unable to verify the same.
Okay, sir. Thank you. Yeah. Good.
Sir, in case of work in progress,
Yeah.
hello. Yeah.
Yes,
in
sir.
case of work in progress, whether can we rely on engineer certificates? Sir?
Yeah. If he's an expert, then you can rely on that. Secondly,
he is employee of company.
No, employee of the company, then you can rely, but you should have physical verification reports, in the sense that you should have either the report or the photographs as a working document that we have relied on this certificate. Further, these are the photographs that are attached, which shows that the work was under progress.
Okay, thank you.
Yeah. A question: in case of understatement and overstatement of stock, how to deal the same in CARO? Sir, we'll discuss about CARO in a separate section, a separate seminar for CARO. Let's right now stick to forensic audit. So if you have any queries related to the forensic audit, we can stick to that, because I have to discuss the complete scope of work given by the banks related to forensic audit. If you have time, then we'll discuss about the CARO queries as well. So now coming back to the scope of work that is being given by the banks. If I discuss the complete scope of work, you will see that it covers the complete balance sheet. It covers your equity side, it covers your asset side, it covers debtors, other current assets, it covers current liabilities, profit and loss. So basically, the scope of work covers the each and every item that is available in your financial statements. So this is the scope of work that the banks give, like equity capital, sales and purchases, trade receivables, trade payables, accounting policies and practices, money trail, then turnover through the account, debtors, then related party, whether at arm's length or not, substantial debt raised in group companies, unsecured loan, transactions of unit promoters. So this is the complete scope of work that is being discussed by the banks. So we'll go one by one, we'll discuss each and every point, and then I'll try to link up with the practical case studies as well. So like the first point is tracing the source and genuineness of contribution by promoters. So this is the first point. So the first point talks about tracing the source and genuineness of contribution by the promoters by analyzing equity debt infused by the promoters. So what is the background of this? Sir, whenever you go and go to a bank to take a loan, they will ask you that what is the project cost and how much funds you are infusing yourself. So like I told you that the project cost was 1,000 crores for setting up a power plant. In that case, so for example, if you want to set up a 200 megawatt power plant, so you will need a total costing of around 1,000 crores to set up a 200 megawatt power plant, solar power plant. So the banks will ask you, okay, sir, we are ready to fund you 800 crores, but 200 crores you have to bring as a promoter contribution. So what happens in promoter contribution? Generally, the banks take a certificate from the chartered accountant that the source and genuineness of contribution by the promoter is genuine. The source of contribution by the promoter is genuine. Now, how do you verify that thing? I have seen many chartered accountants just signing the certificate on the basis of bank statement of companies. Like I'll give you an example what had happened in one of the cases. There is a company A, it has directors B and C. So what happened? Company A paid money to the creditors. Creditors paid money to B and C again infused the funds in the company as a promoter contribution. So company A paid funds to the creditors against purchase of goods. The creditors again paid back the money to B and C, the directors, and B and C again infused the funds into the company as a promoter contribution. This is not a promoter contribution. This is just round tripping of funds. There is no promoter. Promoter contribution means that the promoter has infused funds from his own sources, the tax paid money, either in form of FD or he has already funds in his bank account or he has taken loan or whatever the case may be. But that should be from promoter's own sources. If you have seen, if you have heard about the EPC projects, NHI. So what happens under NHI? If you want to get any project under NHI, your company should be registered in that state. This is the clause that NHI puts in its contract. So if you want to undertake any project for NHI, you have to have a company in that state. So generally what happens? So there is a company A. Suppose I will take an example of ILNFS. So ILNFS is one company. It has set up many special purpose vehicles, SPVs. It has set up SPVs in all the states in India so as to take a road project from NHI. So what will happen? NHI will give the contract to the main company with a condition that it is to be executed by the SPV. So NHI has given a contract of road. Suppose for an example in Visakhapatnam, there is a company. So NHI has given a road construction project to a company in Visakhapatnam. Visakhapatnam is an SPV of a company in Mumbai. So suppose an example, there is a company in Visakhapatnam, company V. It is an SPV of company ILNFS in Bombay. So what will happen? Company V, the Visakhapatnam company will have to show promoter contribution. So promoter, how will they show promoter contribution? They will ask the company in Bombay to give funds as a promoter contribution. Now, what is the fraud that is being undertaken? What happens? Company in the Bombay B, company B, it has set up 10 SPVs in various states. It has taken bank loans in all these 10 companies. Now, bank loan from one company is taken by company B and shown as a promoter contribution in company V in Visakhapatnam. So, originally company B did not have any funds of its own. They have taken a bank loan in any other SPV, and that bank loan has been infused in company V as a promoter contribution. This is not a promoter contribution. This is just round tripping of funds. How can you identify that? Now we'll come to a chartered accountant as a CA. You must have viewed that many of the clients come to you to sign certificate to be given in banks of promoter contribution. Never sign that certificate unless and until you have bank statements of the promoters. I'm not talking about the company, I'm talking about the promoters. You have to verify the bank statement of promoters to check from where did they get funds to invest in the company. You need not check bank statement of the company because In the company, funds must have been infused. In 100% cases, funds, they do come in the company. You have to check the bank statement of the promoters from where did they get the money. I'll give you an example in this. Suppose promoter B received funds from his son. Now what will happen? You have to ask the bank statement of his son. Suppose his son received funds from his wife. You have to ask the bank statement of his wife. Now the question comes to what extent you can go. So you have to ask for the bank statement of promoters till you find an unrelated party. Till the time you are getting a related party, you have every right to ask for their bank statements. You will have to ask the promoter to produce their bank statements. Till the time you are finding a related party. When you get an unrelated party, then it is fine, then you need not worry about that. Hence, it is very important that you have to verify the promoter contribution thoroughly. I'll tell you a classic case that had happened. I was doing audit for one of the banks in Haridwar. So when we verified the promoter contribution, what had happened? The same thing had happened. The company paid to the creditors, creditors paid to the promoters, and promoters infused back the funds in the company as promoter contribution. On this basis, we classified the account as a fraud account. We gave our report to the banks. You won't believe what the bank did. After 10 days, banks gave an advertisement in the newspaper. They gave an note in the newspaper of Haridwar, the main newspaper. What they wrote? This company A has undertaken fraud with the banks. Further, the statutory auditor of the company are involved with the company with the name of the firm and the mobile number. They have given a newspaper advertisement of such thing. Reason? The statutory auditor had given a certificate of promoter contribution to the banks. I got a call from the statutory auditor of that company. That, sir, you have undertaken the forensic audit. Why have the bankers written my name in the newspaper, sir? I was shocked that why have the bankers written the name of the statutory auditor in the newspaper? I talked to the banks. They informed me, sir, he has given the promoter contribution certificate, hence he was involved in the fraud. That's why we have written his name in the newspaper. I told the banker, sir, till the act is proved, you cannot write anything. You should have filed a complaint with CBI and let the CBI decide whether it was actually a fraud or not. But they are saying we have already published it in the newspaper, we cannot do anything. So before signing any promoter contribution certificate nowadays, please be extra sure that you do not sign any certificate without verification. While you are verifying the source and genuineness of promoter contribution, you have to verify the bank statements of promoters, not only the company. You have to verify the bank statements of promoters to check whether the funds have been infused from genuine sources or not. Please remember that. I hope this point is clear. If as soon as I complete one point, if you have any queries, you can unmute yourself and ask me queries. I'll move to the next point then. The next point comes regarding sales and purchases, the revenue recognition. Now I'll tell you industry-wise what all needs to be checked. So whenever you are verifying the sales and purchases, you have to identify the industry that you are auditing. Like it can be like I've told you earlier, it can be a manufacturing industry. It can be a trading industry. It can be a service sector industry. So your verification of sales and purchases will be dependent on that. Let me give you an example. For an example, you are verifying a manufacturing industry. If I'm doing a forensic audit of a manufacturing industry or a statutory audit, what I will ask? I will ask first and foremost the gate pass register. What is a gate pass register? So any manufacturing concern, it receives raw material, it consumes them, manufactures finished goods and sells them. For all these things, the promoter has to maintain a gate pass register. And what is there in the gate pass register? At what time, which truck number, which person, what was his mobile number, what is the item that he brought. And when the manufacturing is complete, who took out these goods, in which truck number, at what time, what was the quantity, and what was the vehicle number, mobile number of the driver, everything has to be maintained in a gate pass register. So if your company is into manufacturing industry, first and foremost, you have to ask the gate pass register, even if you are doing a statutory audit or any other audit for that matter. If the company is not maintaining gate pass register, there is a high percentage of chance that the company is not actually undertaking any manufacturing activity. Because without any gate pass register or goods inflow and outflow register, you can never work in any manufacturing industry. Along with the gate pass register, what you have to see? You have to see the transportation bills. You have to see the bills. You have to see the way slip. Dharam kata jisko kehte hain. Way slip. You have to see good receipt note, good dispatch note, the sales invoices. All those things are to be seen. Other than matching it with the GST, e-way bill and all those things, this is the basic documents that I'm telling you, which you have to see while you're verifying the sales and purchase transaction. Suppose for an example, you are doing it for a service industry, suppose for an hotel industry. So I give you an example of an hotel industry. How will you verify their sales and purchases? So in hotel industry, there will be sales. How will you verify that? So while doing, you have to remember, while doing any audit of an hotel industry, always two softwares are maintained in a hotel industry. One software is the one in which books of accounts are being maintained. And second software is the one in which is being maintained at the reception. Second software is the one which is being maintained at the reception of the hotel. Now, as an auditor, what you have to do? As an auditor, you have to ask the management to provide you the complete list of guests from the software which is maintained at the reception. The software at the reception, what all information do they maintain? They maintain the name of the guest, the time in, the room number allotted, the government identification number, mobile number, and email ID. So what had happened, I undertook forensic audit of one of the companies which was into a hotel industry. It was a very big group. So once I took the audit, what had happened? I asked the management to provide me the list of guests as per the reception software. When we verified that list, we observed then in 40% of cases, the government identification number was not mentioned. And out of these 40% cases, in 30% cases, same mobile number was being entered. And that mobile number was one of the staff of that hotel. This clearly shows that they were inflating their sales by showing fake guest inflow and outflow. So while doing any audit of hotel industry, what you have to do? You have to see that what is the inflow of the guest and whether the proper records of PAN card or Aadhaar card are being maintained by them or not. I'll give an example of another industry. Suppose you are doing an audit for a rice industry, which is into manufacturing of rice. What do you have to do? You have to check inflow of paddy, because rice is being made from paddy. Paddy is the raw material. From paddy, it is converted into rice. So what you have to do? You have to check the inflow of paddy. You have to check the consumption. You have to calculate the consumption ratio. So while you are doing any forensic audit you are doing, first and foremost, you have to understand the nature of industry that you are auditing. Unless and until you know the nature of industry you're auditing, the cost that is being undertaken to produce a good, to produce rice, to produce sugar, you will not be able to undertake that audit. So you will have to have an understanding of the industry that you're auditing. I'll give you an example.
A small doubt, sir, regarding the hotel industry. What is the government identification number?
Sir, PAN card, Aadhaar card.
So. Okay.
Yeah. So secondly, if I give you an example of, suppose I give you example of like I've given you an example of manufacturing industry. What had happened? I was doing audit for one of the companies, and I observed that the company was showing manufacturing of goods, but the power and fuel expenses, power and electricity expenses were only 1 crore rupees in comparison to a turnover of 1,000 crores. So if you are in a manufacturing industry, your major expense has to be power and electricity. If you are into a trading industry, then I can assume that your power and electricity expense will be less, or it will be very minimal. But if you are into a manufacturing industry and you have set up big factories, you ought to have a power and fuel expenses. So while doing any audit, you have to understand the nature of industry and what expenses are being booked. If you are into a service industry, the major expenses pertaining to salary. Like I told you about hotel, the major expense will be consumables and the salary expenses, the staff welfare expenses, because once the hotel is there, it is a fixed expense. The major expenditure year on year will be of the salary expenses. If you are doing audit for a software industry, what will be the major expense? The major expense will be of salary. The employee cost will be major in software industry. If you are doing into manufacturing of sugar, what is the major expense? The purchase of sugar cane is the major expense, and electricity will be the major expense. Now, I'll tell you in one of the cases, I did an audit for a sugar industry. When we verified what we did, if you know about the industry, the major of sugarcane is being purchased from farmers that are there located in the nearby area. If you are doing any audit for sugar industry, the majority of input of goods is from the farmers that are available in the nearby area. So once you visit that factory, what you can do, you can ask the company to produce 10 farmers on sample basis, from whom you can take their statement, or you can ask them that what is the process of giving the sugarcane to the company. Because in sugarcane industry, 85% of funds are being stored by the district magistrate of that state. If you have any experience of sugar industry, 85% of inflow of funds are being monitored by the district magistrate of that state, whereby such funds are paid to the sugarcane farmers. So if you are doing an audit of sugarcane industry, sugar industry, and the amount payable to sugarcane farmers is very high, it means the funds are being diverted by the company. Reason being, 85% of funds are to be paid to sugarcane farmers from whatever amount is received by the sugar industry. Hence, it is very important for you to understand the nature of industries. Again, I'll give you an example of a jewelry industry. Just I told you about manufacturing industry or trading industry. Trading industry I'll talk about later. Manufacturing industry, like I told you about the documents you need to have. In jewelry industry, you will not find any transportation documents or anything. You will find only invoice, only weight slip if they have done weight of that. That is only two things that you will find in jewelry industry. Hence, to identify the jewelry industry, to verify sales and purchase of jewelry industry is very, very difficult. Reason being, the consumers are general, they are normal people. So the filing of GST returns for their GST number does not come into picture. Hence, jewelry industry is one of the most difficult industry to audit. Second reason for that, suppose there are two jewelers side by side. If I have to show stock to me as a statutory auditor, what I will do? I'll bring some gold from the side by shop and put it in my shop for 1 hour. And I'll show that this is my stock and I'll revert it back. So jewelry industry is one of the most difficult industry. Now what you have to do, I'll tell you one of the frauds that we identified while doing the audit of a jewelry industry. The company had to submit stock statement to the banks. In stock statement, they have to show stock. So what was happening? The company was showing the stock in stock statement on FIFO basis, whereas in their balance sheet, they were showing stock on weighted average basis. Because of which they were overstating their stock in their stock statement, even though the quantity was same. Suppose, for example, 10 kgs of gold is there. The quantity in the balance sheet and in the stock statement are same. But while submitting stock statement to the banks, they were using FIFO method, whereas in the balance sheet, they were using weighted average method, thereby overstating their stock to the banks to avail higher drawing power. Similar thing happens in jewelry industry, whereby they overstate their sales and stock by showing, suppose for example, the gold rate is 50,000, but they are selling it at 60,000, 70,000, 80,000. This is clearly an overstatement, because in jewelry industry, the rate is easily available in the market for 22 karat, 24 karat, whatever the case may be. And you will not expect any consumer to pay 60,000 for an amount whereby the actual rate is 50,000. Because the quality is same in jewelry. It is just the making charges, the labor charges that are there. Hence, while auditing the jewelry industry, you have to focus on valuation of goods and valuation at which sales are being made. There can be various other examples. So while verify, I'll tell you about trading industry now. In trading industry, you have to verify the sales and purchases. If the goods are being sold at a nominal profit, I'm talking about the gross profit, sales minus purchases. If the goods are being sold at a very nominal profit, there is a high percentage of chance that it is just a turnover and nothing else. Because if suppose for example, I have a mobile phone, I bought it for 35,000 and I'm selling it for 40,000, it is fine. But if I bought it for 35,000 and I'm selling it for 35,010 rupees, then what is the purpose of doing the business? You have, what I told you earlier, you have to keep yourself into the shoes of the borrower. You have to see whether you would have undertaken such transaction or not. If not, there is a high percentage of chance that it is just a round tripping and nothing else. So in trading industry, why trading is done? To earn profit. So even if you're doing the statutory audit of a company, this is a very simple method I'm telling you. For manufacturing industry, ask your client to produce a gate pass register. In jewelry industry, ask your client to show the valuation of goods. In hotel industry, ask the client to produce the details as per the software, as per the reception. In trading industry, calculate the gross profit that is being earned by your client. If he is booking very nominal profit in trading, there is a high percentage of chance that it is just round tripping and nothing else. There is no actual sale purchase. Because there is no fixed cost in trading industry. It is just goods inflow and outflow, nothing else. Then if he is earning a nominal profit and booking losses, then what is the purpose of doing trading? It is better he shuts down his business. So I'm telling you the scenarios whereby you have to be extra cautious while auditing any company. Like I have told you, gate pass register. In one of the cases, I've done audit for one of the very big companies. It had an exposure of, the group exposure was around 40,000 crores. I did audit for one of the companies. What fraud they were undertaking? They were doing circular sales trading. Like company A was selling to B, B to C, C to D, D to E, E to F, F to A. So there was a circular trading that was going on. Like A, B, C, D, E, F, then back to A. How can you identify such companies? You have to review their data as per the MCA record. Like what I did, we were doing audit for company A. We identified that company A was selling goods to B. Now, on the basis of data available, we could identify that company B was related to company A, but they have not disclosed that as a related party as per accounting standard 18. When we identified the balance sheet of company B, we somehow found out that company, because they had given the name of the debtors in their balance sheet, we found out that company B was selling to company C. C was selling to D, D, E, F, and F was again selling to A. So there was a complete circular trading of sales that was being undertaken. So while verifying your details, while verifying your sales and purchases, you have to check whether the sales and purchases are being made to genuine parties or not. Like I'll show you a website that is called zobacorp.com. Just hold on. I'll stop my screen share. How can you identify the related parties I'm telling you? So there is a website called zobacorp.com. It is similar to the MCA website whereby you can get the details of the company. In this website, the data is updated a bit slow. Like if you update your directors on MCA, it will be updated here after 2 to 3 months. So it is a bit slow as compared to MCA. But as soon as you put an address here, you will come to know how many companies are registered on this address. So for an example, I type the company Reliance. The address of Reliance is this. I've copied the address. I paste it in the address. We select the address. I paste it here. So these are the companies that are registered on this address. How many? 113 companies are registered on this address. On the address of Reliance Limited, 113 companies are registered. Even though the directors may or may not be common, but you have to identify, you have to verify whether, suppose Reliance is selling goods to these parties now. Reliance is selling goods to all these 113 parties. In that case, it becomes your duty as a forensic auditor to identify how these 113 companies are having similar address to that of Reliance. You must have heard lifting of corporate wheel in Companies Act. While doing forensic audit, you have to lift the corporate wheel. You have to go beyond the directors to identify whether the company is indirectly related to your company or not. So even if you are having common addresses and not having common directors, you are not related as per AS 18, but this should create a suspicion that this company might be related to your company. Generally, what happens? The companies, what they do, they have PN or some other person, they make him the director in the company. Any PN or anyone else. They make him the director in the company, but the address is same. In that case, you have to be suspicious and you have to mention such fact in your report that on the basis of common addresses, we found out all these companies. And these are the transactions that have been undertaken with such companies, and these might be indirectly related to the borrower company due to common addresses. So like I've told you, for an example of circular trading A, B, C, D, E, F, and A, this is how we found out all these companies. All the 8-9 companies had similar address. And through similar address, we could identify, we could trace back the directors, which were the previous directors or ex-directors. They were somehow related to the borrower company, company A. This is how we could identify the circular trading of sales that was being taken place. I hope this point is clear. I'll give you one more example of sales because I have practical case studies itself. Because if you'll ask me any practical scenario of any of the industry, I can tell you that I have done audit for EPC, iron and steel, jewelry, whatever the case may be, sugar industry, hotel industry. You can ask me example for any of the industry. I'll tell you an example of a export-import company. I'll tell you an example. I'll not tell you the items. I'll give you, suppose for an example, it was a company under salt. I'll tell you the classic case what had happened. A company was dealing in salt. A company is dealing in salt. What it did, it exported 100 crores of salt in one of the ship and sent the ship to sail to be exported to South Africa. So I have sent a ship of 100 crores of salt to South Africa. Now what happened? The ship sank in the sea. Since the ship had salt, the salt got dissolved in the water. So if I am an auditor, if I want to identify, suppose if would have been iron or steel, we could have found out in the sea that iron and steel is there. Since the item was salt, it got dissolved in the water, hence the goods are finished now. Now the company says, sir, we have a loss of 100 crore rupees. The salt has been dissolved. Hence, we are an NPA and we have not done any fraud. Okay. As an auditor, now you need to have an understanding of import and export as well. What is the understanding you need to have? As and when goods are being sold through a shipper, the liability is transferred to the transporter as soon as the goods are loaded on the ship. First. Secondly, whenever goods are being exported via ship, they are insured. Insurance is taken for the goods that are being sent by the ship. So as a company, as a borrower, what should I have done? I should have filed a case against the transporter, against the shipper. I should have filed a claim before the insurance agencies to recover such money. and I should have filed a case in the court for recovery of money from these two parties. This is the normal procedure that I would have done. But the borrower, what he did, he just sent a legal notice to the shipper that please pay our money. He refused, and they did not do anything. They filed for insurance claim. Insurance company refused. That as per our understanding, the goods were not there on the ship. They did not file any appeal against such thing. This clearly shows that it was done intentionally just to show a loss of 100 crores, whereby there was no actual export of goods. There was no actual export of goods, and it is just whereby they are showing stock that has been lost due to transit. So you need to have an understanding that if there is insurance, if the goods are being sent by a vehicle, by a ship, the goods are insured. Secondly, as soon as the goods are loaded on the ship, it is the responsibility of the shipper to make the goods reach the port. If the goods are not being exported, then there is a high probability that the goods were not there on the ship if no case has been taken. I hope this point is clear. So this is a brief overview that I've given you of sales and purchases, what industry wise. If you have any query, I'll just see the query chat box. How many gunny bags purchased for salt packing? इसका तो मैं reply नहीं दे पाऊँ. Excellent connected party you identified. So it is very important for you to identify. You have to verify the sales and purchases. For an example, you could not identify any discrepancy in sales and purchases, then you have to come to debtors and creditors. So first and foremost is verifying the sales and purchases. Documentation, if you want to ask for any specific industry, I can tell you for any industry you want. Iron and steel, if you are doing sales and purchases, what happens? In iron and steel, there are brokers that are there. Like there is a broker, he will have 20 parties under him through which sales are being made. You as an auditor have to ensure that you get confirmation letters from those 20 parties directly and not from the broker. In case of iron and steel, if you were to see. Angdi kehte, if you know the Hindi word, it is called angdis. So in case of iron and steel, if sales are being made through broker, you have to ensure that you receive direct confirmation from those 20 parties and not the broker. Because it is very easy for the broker to prepare confirmation for these 20 parties and give it to you. You have to check the sales purchase, transportation document, way slip. Way slip is a very important documentation while transferring high quantity goods. I'll give you a very classic example what had happened in my case. I was doing audit for a company which was manufacturing TMT bars, ingots, billets, and all those things. Relating to iron and steel, you can take. When we verified the transportation documents, we identified that the vehicle number being entered on the transportation documents were of two-wheelers, three-wheelers, e-rickshaw, whereby the goods transferred were of various kgs. They were in quintals. 1,000 metric ton, 2,000 metric ton was the amount which was being shown in the bills. On verification of vehicle number, we identified that these vehicle numbers pertain to two-wheelers, three-wheelers, e-rickshaws, which is not possible in any way. This clearly shows that it was an inflated turnover and nothing else. There was inflated sales and purchases and nothing else, whereby no actual sales were being made by the company. How will you identify the vehicle number? There is a website called Parivahan or vahan.nic.in. It is a government website you will find on the Google. It is a government website whereby you can identify the vehicle numbers and the nature of its registration. Now coming to the third point, which is regarding debtors. Suppose, for example, you have identified the sales and purchases. You could not find anything. Now what happens next? Next, you have to focus on debtors and creditors. Again, now as while doing statutory audit, you have to bifurcate, you have to provide a complete aging analysis of debtors and creditors. You have to provide aging analysis of creditors as well in the latest Schedule 3 amendment, if you'll see. First and foremost, you have to bifurcate your debtors into up to 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and more than 3 years. Then you have to bifurcate your debtors into considered goods, considered doubtful, undisputed, disputed. So you have to bifurcate your debtors into these 4 sections, and you have to bifurcate your debtors into 6 months, 6 months to 1 year, 1 to 2, 2 to 3, and more than 3 years. Similarly, you have to bifurcate your trade payables as well. MSME, other than MSME, disputed, undisputed. And you have to bifurcate the aging analysis of trade receivables up to 1 year, 1 to 2, 2 to 3, and more than 3. So now the complete bifurcation is to be provided for debtors and creditors in the balance sheet itself. So this will help you while doing the forensic audit or statutory audit to identify whether in actual trade receivables are there or not. Just a moment. Just. The second point comes regarding debtors. So how will you identify the debtors? Once you have verified the sales and purchases, now you have to focus on debtors. Suppose you are not able to identify anything in sales and purchases. First and foremost, what you have to do is you have to send them confirmation letters. As a statutory auditor as well, now it is, you cannot, as I told you, you cannot rely on MRL now. You have to, on sample basis, a top 20, top 30 parties, you can send confirmation letters. So you have to send, as a forensic auditor, as per the materiality fixed by you, you have to send confirmation letters to these parties. First and foremost, confirmation letters. Next comes the physical verification of debtors. Suppose you are doing an audit in, suppose Delhi. What you have to do, if it is written in the scope of your work, you have to physically verify those debtors. What you have to do, you have to visit the premises of those debtors, and you have to request them to provide you confirmation. You cannot force them because you do not have the powers of any government official. You can just request them to provide you the physical confirmations of the amount outstanding. If they do not provide you, you just have to return back. What you have to do, you have to click photographs of the premises of the debtors from outside if you are not permitted from inside, or those photographs are to be attached with your report. So first and foremost, you have to send them confirmation letters. Suppose you do not receive the confirmation letters, you go for you go for physical verification, but you could not identify anything. Now, what is the fraud that is undertaken in the debtors? As soon as an account is classified as an NPA, what happens? The borrower generally write-offs these balances or files an arbitration cases. Or thirdly, he adjusts the debtors and creditors balances. These are the 3 ways in which the debtors are written off by the borrower. Either he writes off the debtors and debtors balances, he files, takes an unfavorable arbitration award, or he adjusts the balances of debtors and creditors. These are the 3 things how they adjust the debtor balances. How do you verify and identify these things? Suppose he writes off those balances. First point, he writes off the balances of debtors. You have to ask the borrower to provide the legal documents or legal recourse taken by him before writing off such or creating provision for such debtors. They should have a proper legal reasoning whereby they have taken reasonable steps to recover such money. However, they still could not recover such money. If they have not taken any reasonable steps to recover such money, in that case, you can clearly write that these do not appear to be genuine and hence may be classified as a fraud, whereby it is not in normal course of business that no legal steps have been taken by the borrower. So you as an auditor have to ask the management to provide you the legal steps that they have taken before writing off such balances. If they are not able to provide you any legal steps, you can clearly write it as a fraud account. Secondly, adjusting the balances of debtors and creditors. Now let me ask you a question. Whether adjustment of balances, you can write it yes or no in the chat box, whether adjustment of balances between debtors and creditors is a fraud or not. if you are adjusting the balances of debtors and creditors, whether it is fraud or not. Yes or no? Yes, yes. No.
Sir, in some cases,
Depends.
uh,
सर चैट बॉक्स में लिखिए सर, आपकी ना आवाज ब्रेक हो रही है सर, चैट बॉक्स में लिख दीजिए सर.
Sir, in some cases, okay.
Yes, yes, depends. No. ठीक है सर. Sir, you would have read a definition under Indian Contract Act that consideration can mean kind as well, cash or kind. There's a definition under Indian Contract Act that the consideration for any goods or services can mean cash or kind. So if you are adjusting the balances of debtors and creditors, then it is not a fraud account. If you are adjusting the balance of debtors and creditors, it will not be classified as a fraud account. The reason being, the consideration can mean cash or kind. But what is the but here? First and foremost, it will be classified as diversion of funds. There is a difference in definition of diversion of funds and difference in definition of fraud. As per the definition of diversion of funds, all the funds are to be routed through a bank account. You cannot directly set off these balances. All the funds you have to receive in your account, from that you can pay to the creditors or whatever the case may be. So all the funds are to be routed through the bank account only. So it will be classified as diversion of funds, but not fraud. Now, when will it be classified as a fraud? Suppose, for example, I adjust balances of A and B both. A is a debtor and B is the creditor. I adjust balances of A and B. It will be classified as a fraud if I do not get confirmation from both the parties that the balances have been adjusted. Secondly, there should be a tripartite agreement or tripartite confirmation whereby A is confirming that he has paid the money to B on behalf of your borrower company, and B is confirming that he has received money from A on behalf of borrower company. So adjustment of balances of debtors and creditors will come under the definition of diversion, but will only come under the definition of fraud only if you do not have supporting documents for those amounts. So if you have all the supporting documents, all the relevant documents pertaining to the adjustment, it cannot be classified as fraud. It can be classified as diversion of funds. Third case, regarding arbitration that I've told you, in debtors. How will you verify? In first and foremost, you have to identify what was the basis of appointment of arbitrator, whether they had any contractual agreement whereby they had to appoint an arbitrator or not. If they do not have any contractual agreement, then on what basis they have appointed the arbitrator? Secondly, who is the arbitrator they have appointed? Whether it is any renowned advocate or renowned lawyer, or whether it is someone else who they have appointed as an arbitrator. You can verify those things. Thirdly, what is the documents that they have given to the arbitrator and what documents have been given by the other party to the arbitrator to arrive at an unfavorable decision. You can ask the party to produce all these documents to you in order to verify the arbitration award. Let me tell you, arbitration award is like an high court order. No one can challenge the arbitration award. But you as an auditor have the right to ask for all the documents on the basis of which arbitration award has been passed. First, you have to check whether the arbitrator could have been appointed or not. Secondly, who is the arbitrator who has been appointed? Thirdly, what are the documents that the borrower and the other party has given to the arbitrator to arrive? If you identify that any such negative confirmation is there, then in that case, you can challenge the arbitration award in that case. So in basis of debtors, as soon as, let me tell you, as soon as the account is classified as an NPA, either the stock will be there or the debtors will be there. In 95% cases, it will be debtors. Reason being, if the company is showing as a stock, then the banks can come to the company to hand over the stock so that they can sell off that stock and recover their money. But in case of debtors, since there is no stock, there is no stock, In that case, they can send confirmation letters to debtors to get confirmation. But recovery from money from debtors is very difficult. It is very difficult to recover such money from debtors after the account has been classified as an NP. So what is the scope that is there in the debtors? Reciprocal receivables. You have to identify reciprocal receivables. What do you mean by reciprocal receivables? Like point number 1, reciprocal receivables. You have to identify, like, I have sold a material to company A has sold to B and B has sold to A. Now, how can that happen? Suppose I have paddy. I have sold paddy to company B and company B has sold rice to me. This is called reciprocal receivables, whereby B is a debtor for me and A is also a debtor. A has sold paddy to B and B has sold rice to A. So you have to identify whether the drawing power has been undertaken on such reciprocal receivables. They should not take drawing power on such reciprocal receivables. They have to adjust the balances of both the debtors and creditors, and then they have to take their drawing power while calculating in the stock statement. So you have to identify whether there is any case of reciprocal receivables. Secondly, in reciprocal receivables, you have to identify whether it is an actual sale or it should have been classified as a job work. I'll tell you one of the classic cases that has happened recently. I was doing audit for one of the company which was dealing in iron and steel. What was the company doing? The company was receiving ingot. The company was receiving ingot from one of the companies. It was converting it to a TMT bar and selling it back. It was a job, they had a job work agreement with them. It was completely a case of job work, but the company were showing it as a sales purchase in their balance sheet just to overstate them. They were overstating the sales and purchases in their balance sheet, even though they should have only booked the job work income because they were only undertaking job work activities. So you have to identify whether in actual sale purchase are being undertaken or it should have been only job work income that should have been booked. Like in jewelry. In jewelry, what happens? You take a gold bar, you give it to your labor, they convert it into a, suppose, any item and revert it to back. In that case, they should only book a job work income. But if you are showing it as a sale and purchases as a jeweler, then it is overstatement of sales and purchases by you. Because you are only sending the goods for job work activity and you are bound to receive those goods back. In that case, you should never classify that as a sales purchase. That should be treated as a job work income. I hope this point is clear regarding sales, purchases and debtors. Fictitious that I have told you that in actual the sale purchase was not made, only fictitious debtors are overstated just to claim higher drawing power. Inflated debts. Already realized debt. What are already realized debt? They have adjusted the balances of debtors with creditors or they have received the funds in cash, but they are still showing as a debtor in their balance sheet. No amount is payable by the debtor to the company, but still they are showing an amount that is receivable from them. So all those things can be identified only from confirmation, only from third-party confirmation, from the confirmation from the management, and identifying the sales and purchase transactions. Only then you can identify and verify such balances. Next come regarding payables. As I have told you regarding receivables, the similar way you have to check regarding payables. You have to check whether the actual goods were received or not. All the documents that I have told you in sales are to be verified while you are verifying the purchases and payables. Good receipt note, way slip, transportation slip, all the physical documents that you will be verifying in sales are to be verified in purchases as well. And once you have verified the purchases, then you have to go towards trade payables. Next point is a very important point regarding reviewing the accounting policies and practices. Now, what is this point? While doing any forensic audit, you have to have good knowledge of accounting standards. What are the accounting standards that are being followed by the management? AS2 inventory, AS10 fixed assets, AS13 investments, AS21 consolidation, AS29 contingent liabilities, AS26 intangible assets, AS18 related parties. So unless and until you have good knowledge of these accounting standards, you will not be able to undertake the forensic audit. Like I had given you an example of AS2 of regarding inventory. What I told you in inventory, in balance sheet, they are using the weighted average method. But while submitting stock statement to the banks, they are using FIFO method. So unless and until you have knowledge of accounting standard, you will not be able to identify this point. I'll give you another example, AS21 consolidation. I did an audit for a very big listed company. It was a very, very big listed company. I did an audit for them. While reviewing the balance sheet, I observed that the company had a branch. So there is a company A, it had a branch B. I'm talking about branch, not any other company, branch. So while consolidating their balance sheet, what I observed that company A had sold goods to company B. So company A had sold 100 crores of goods to company B, to branch B. While consolidating the books of both the companies, what mistake the company did? It showed 100 crores as sales and 100 crores as purchase. So company A sold goods to branch B of 100 crore rupees. So company A has a sale of 100 crores and branch B has a purchase of 100 crores. While consolidating their books, the company continued to show 100 crores of sales and 100 crores of purchases. Whereas the same should have been netted off and should have been nil. Nil sales and nil purchases. But in violation of AS21, they inflated their sales and purchases both. Intangible assets. If you would have heard about Kingfisher, the valuation of that bird, the intangible asset, that bird, one of the company had valued it at 3,200 crores, and another had valued it at 1,600 crores. So there was a variation of double amount in valuation of intangible assets. So unless and until you have knowledge of these accounting standards, AS29 contingent liabilities. We did an audit for a company which had bank guarantee as its limit. They were having bank guarantees. On review, we observed that they did not disclose the amount of bank guarantees that was outstanding as on balance sheet date, which was required as per AS29. They have misstated their balance in the balance sheet, whereby they have overstated, whereby they have not disclosed the balance of bank guarantees. Bank guarantees is a contingent liability and should have been disclosed in the notes to accounts. Since they did not disclose that bank guarantee, they violated accounting standard 29 and did not present a true picture to future lenders that they are already having a BG limit from these banks. AS18 related parties, like I've told you, you have to question the management if they are even having a common address. You have to question the management that how such party is not a related party, even though the directors are not same, the shareholders are not same, but the address is same. You have to write in your report that these companies might be related to the borrower company since they are having common addresses. So you have to ensure that you write, you have to understand all this. AS13 investments. Unless and until you know a differentiation between temporary diminution and permanent diminution, you will not be able to audit that company. There is a difference between temporary diminution and there is a difference between permanent diminution. So if the company is regularly booking losses for past many years, this is a case of a permanent diminution. Then in case of borrower company, the investment should have been, the provision should have been created for such investment. If no provision is being created, even though the company has regularly been booking losses, it is a violation of accounting standard 13. So I hope this concept about review the accounting policies and practices adopted by the management. You have to see whether all the accounting standard accounting policies adopted by the management are in general practice or not. I'll tell you, I did an audit for one of the companies in the telecom sector. I did an audit for them. As you know, in telecom sector, they have big towers, the networking towers that are set up at various places. as per the Companies Act and accounting standard, the useful life of such tower is around 30 years, I guess. But while doing the audit, we observed that the company was taking their useful lives as 60 years. By increasing the life, they were charging less depreciation in their balance sheet, thereby overstating their profit and showing a rosy picture to the lenders. So the life of the tower was 30 years, but they were taking the life as 60 years, thereby charging less depreciation. Accounting standard 10, fixed assets. So unless and until you have the details, you have the knowledge of the accounting standards, the Companies Act, you will not be able to undertake that audit. I hope this point is clear regarding accounting policies and practices. The next point comes regarding ascertaining money trail and end use of funds disbursed by the lenders. This is the scope that is given by the banks, and this point has now been added in your CARO 2020 as well, whereby you have to comment whether the funds have been utilized for the purpose for which they were sanctioned or not, the end utilization of funds. Now, how as an auditor you will verify this? As an auditor, what you have to do? You have to take the books of accounts and the bank statement of the borrower, and you have to prepare a complete list of inflow and outflow funds. You have to show what is the inflow and what is the outflow of the fund. You have to show them completely. You have to see from where the money has come and where the money is going in order to identify the end use of funds. The complete money trail is to be prepared. And this money trail is very important in case of term loans. In case of cash credit limit, it is very difficult to identify the trail of funds. But in case of term loan, you can easily identify from where the funds have come and where they have gone. Because term loan is always given for a specific purpose, whereas CC limit is generally given for basic business working capital purposes. So term loan, since it is given for a business purpose, in that case, you have to see whether the term loan has been utilized for the purpose for which it was sanctioned or not. There is a definition of in diversion of funds and fraud and siphoning of funds. All three have been defined separately under RBI circular, whereby you have to comment whether the funds have been utilized for the purpose for which they were sanctioned. And they have given exceptions, scenarios in which it can be considered, like you have taken funds for general business, short-term funds have been utilized for long-term purposes. If you would have heard the case of ILNFS, I'll give you a practical case study. So if you are using short-term funds for long-term purposes, it is called diversion of funds. I'll give you a practical example of ILNFS. Do you know why why ILNFS failed? ILNFS failed. The reason was that it was utilizing short-term funds for long-term purposes. Just before the default by ILNFS, the credit rating of the company was AAA, AAA plus, AAA, AA. That was the credit rating that was given by the credit rating agencies. What was the default in that? What they were doing, they were raising short-term funds in form of commercial papers. If you know what is commercial papers are instruments which have a maximum tenure of 365 days, commercial papers. So what they were doing, they were raising money in form of commercial papers, and the funds or raised were being given to parties which were to be repaid in 5 years, 6 years, 10 years. So I'm raising funds for 1 year and parking such funds to such companies which will be repaid in 5 years, 10 years. So what was happening? A bubble was forming whereby short-term funds were being raised and were being utilized for long-term purposes. So at one point of time, they defaulted. They were not able to repay their funds. Reason being, all the funds were being used for long-term purposes. All the funds that they had, they were being used for long-term purposes. So at one point of time, when there was a due date, they did not have funds to repay such commercial papers. Hence, such default happened. There are many other scenarios whereby the funds have been given for evergreening or to related parties, that is separate issue. I am talking just about the core issue due to which ILNFS, the Pandora box of ILNFS opened. The short-term funds were being utilized for long-term purposes. Hence, you as a forensic auditor have to check whether the end utilization of funds have been done properly or not. I'll give you an example of Kingfisher. One of the scenarios I'll tell you in Kingfisher what has happened. They were taking on rent the aircrafts from foreign companies from out of India. So while taking an aircraft on rent, what they were doing, they were paying a hefty rent for that. They actually in market, the rent was around 10 lakhs rupees per month, but they were paying 50 lakhs, 1 crore rupees per month for availing the lease of such aircrafts. Thereby, they were siphoning of funds. They were doing siphoning of funds from India to foreign companies. So they had to pay 10 lakhs, but in actual, they were paying, for example, 1 crore rupees for leasing of aircraft. So 90 lakhs this way was being siphoned off from India to foreign companies. How, as a forensic auditor, you will identify? You will have to identify, you will have to check what is the market rate at which aircrafts of such capacity are being rented out. Maximum variation can be 20%, 30%, that instead of 10 lakhs, he's paying 15 lakhs or 20 lakhs even, but not 1 crore rupees. So this is the way you will identify, you will check whether the transactions are being done at arm's length or not. I'll come to that. I'll come to this next point of arm's length or not. You have to check whether the first of all the funds have been utilized for the purpose for which they were sanctioned and whether the transactions are being done at arm's length or not. I'll give you a very, very good example of end utilization of funds. NHAI sanctioned a loan to one of the companies. So for an example, I approach NHAI that I have to develop a road in Visakhapatnam. For that, NHAI sanctioned me a loan of 1,000 crores. Okay, sir. What I did after receiving the contract from NHAI, I subcontracted such contract to another company for 700 crore rupees. Same contract that I had with NHAI, I did the same contract with the other company for 700 crore rupees. So in first transaction itself, I have a profit of 300 crore rupees. Okay. This same company again subcontracted such agreement to other two companies for 500 crore rupees. Same agreements as everything, O&M included, everything included. So in actual, the project cost was way less than 500 crore rupees. It was around 400 to 450 crores was the actual project cost for which the bank have funded 1,000 crore rupees. This is a case whereby if the funds have not been utilized for which they were sanctioned. The actual project cost was 400, 450 crores, whereby the banks have financed 1,000 crore rupees. So as an auditor, you have to verify where the funds have been utilized and whether such funds have been utilized at arm's length or not. If they are not being utilized at arm's length, you have to qualify a report and you have to write that the funds have not been utilized and have been siphoned off from the company, amounting to fraudulent transaction as per RBI Master Circular. I hope this point is clear. Next point comes regarding routing of turnover in the account. Like I've told you that every sales and purchase transactions are to be routed through the account. If not, then it will come under the definition of diversion of funds. It will be treated as diversion of funds, whereby funds have not been utilized for the purpose for which they were sanctioned. Routing of turnover. इसमें सिर्फ दो clauses है. There are two clauses in this. Now I'll tell you the differentiation between diversion of funds and differentiation between fraudulent transaction for this. Routing of funds through other than bank accounts is called diversion of funds. Routing of funds through other bank accounts, not for business purposes, it is called fraud. So if you are routing your funds through other than lender bank accounts, but for business purposes only, it will come under the definition of diversion of funds, but not fraud. But if you are using the funds in other, routing the funds through other than bank accounts and which are not being utilized for business purposes also, then it will be called as fraud. I hope you understand the differentiation between diversion of funds and fraud. It has separately been defined under RBI Master Circular. Let me show you the RBI Master Circular. I'll check if I have it readily available. This is the RBI Master Circular whereby they have defined fraud. This is the definition of fraud. Kite flying, you leave it. It has been old now. It is not applicable now. Fraudulently removal of pledged stock, disposing of hypothecated stock without knowledge of bank, inflating the value of stock in stock statement, and claiming excess drawing power. So if you are removing the hypothecated stock without the approval of banks, or inflating the stock in stock statement and claiming excess drawing power, it is fraud. Diversion of funds, criminal neglect on the part of the borrower in adhering financial discipline and managerial failure with malified intention, then it is called as fraud. So diversion of funds with malified intention, then it is called as fraud. अब मैं आपको दिखाता हूँ डाइवर्जन ऑफ फंड्स की डेफिनेशन. लेट मी शो यू द डेफिनेशन ऑफ डाइवर्जन ऑफ फंड्स. This is the definition of diversion of funds. Utilizing of short-term working capital funds for long-term purposes not in conformity of the sanction is called diversion of. Deploying borrowed funds for purpose of activity other than for which they were sanctioned. Transferring borrowed funds to subsidiary companies. Routing of funds through any other lender bank account or member bank account without prior permission of the lenders. Hence, routing of funds through other member bank accounts without permission is called diversion. But not utilizing it for business purposes, then it will be called as fraud. I hope you understand the definition of diversion of fund. It is very important for undertaking any forensic audit. Diversion of fund, siphoning of a funds, and fraudulent transaction.
Sir.
Yes, sir.
Sir, providing loan to non-related parties on an interest-bearing basis, will it come under fraud out of the borrowed money?
Sir, if you have to understand what is written in the sanction letter. If it in sanction letter, it has been mentioned that it is used for business purposes.
It is a working capital loan.
No, then a working capital loan is always for business purposes and not for lending purposes.
Yes. So if it is providing loan to outside, it will come under fraud.
Fraud. It will come under fraud. If they are providing loan to other parties and not for business purposes, then it is fraud.
Okay. Right.
Because the purpose of loan is for working capital purposes.
Yes.
Yeah.
Right, sir. Thank you.
So you have to understand the differentiation between diversion of funds and fraud. They have clearly defined what is diversion. They have clearly defined what is fraud. So any act which is done but for business purposes, then it will never be classified as fraud. It will be classified as diversion. But any act which is done not for business purposes, you can straight away classify that account as a fraud account, whereby they have siphoned off the money for such purposes. I hope this point is clear regarding diversion of funds. Now I'll come back to my presentation. Next point is regarding physical verification of major debtors. Like I've told you that if you have in your scope regarding physical verification of debtors, you can physically verify those debtors. You can visit their premises, click photographs, that is the maximum, or you can request them to provide you confirmation, that's it. So if it is in your scope, then only you need to do physical verification. Otherwise, it is up to you whether you want to physically verify those debtors or not. It is clearly up to you. But if it is specifically written in the scope of work, then you have to physically verify those debtors which are easily traceable or nearby your office. Next point comes regarding commenting on transaction of substantial amount which does not seem to be at arm's length. In this case, you have to identify whether the transactions are done at arm's length or not. I'll tell you an example for this. I did an audit for a company which was into mobile phones. It was dealing in iPhones. It was one of the biggest retailer of iPhones. So when I verified their stock register, when we went through their stock register, we observed that to the related parties, it was selling the iPhone at 60,000 rupees. And to unrelated parties, it was selling the same iPhone for 80,000 rupees. The same model, everything was same. So they were selling to related party at 60,000 and to unrelated party at 80,000. So there was a clear-cut differentiation of 20,000 being made by the company. This clearly shows that these transactions were not being made at arm's length. Reason being, they should have clearly shown that this same model should have been sold at same rate and not a differential rate. If they are selling the goods at a differential rate, then it is not at arm's length. Secondly, if the amount is more than 20 crores in domestic transaction, then you can refer the transfer pricing report as well for verifying whether the transactions are done at arm's length or not. So for verifying the arm's length transaction, you need to verify the stock register, the sales purchase register, and other transactions that are being undertaken. So for an example, if you have lent someone money and it is an interest-free loan, or you are charging a nominal interest on that amount, then such transaction is not at arm's length, whereby it is prejudicial to the interest of the company that you have given such funds at a nominal rate. Then as a forensic auditor, you have to specify that these transactions are not done at arm's length and funds have been siphoned off from these companies to this mode. Like they have undervalued the transaction. The phone should have been sold for 80,000, but they have sold it for 60,000. Hence, 20,000 of the profit has been transferred to the related party. Hence, funds have been siphoned off from the company. I hope this point is clear. Next point is regarding details of substantial debt raised in sister concern, associate concern, either through corporate guarantee or against security of promoters. Whenever you approach for a loan to the banks, they will take your company's guarantee and the guarantee of promoters. Also, in the sanction letter, they clearly specify that you cannot give guarantee for any other loan to any other company. They clearly specify in a sanction letter. So if you have taken a loan in your company and specific guarantee has been given for any other loan in any other company related to sister concern or group companies, you have to take prior approval from your lenders before giving such guarantee. If you have not taken such approval, then it is a violation of sanction letter, and you have to specify that in your report, whereby you have not taken the approval from your current lenders prior to giving corporate guarantee for any other company or security of promoters' assets. Because as you must be knowing, the promoters give a net worth certificate, net worth statement to the banks, which are ultimately signed by a chartered accountant. So prior to giving any net worth certificate, you need to verify whether they have given any corporate guarantee or any guarantee to any of the lenders or not. Next point is regarding movement in unsecured loan. Like I have told you, you have to verify the promoter contribution. See, the funds can be infused in the company either in form of a capital or in form of unsecured loan. There is no third way of infusion of funds in the company, either unsecured loan or in form of capital. So like we have to verify the source of contribution, the genuineness of source of contribution. Similarly, you have to verify the genuineness of source of contribution as unsecured loan as well. You have to verify whether the source of such contribution in form of unsecured loan is genuine or not, as we were to verify in promoter contribution. And the last point is regarding transaction with related parties. Whenever any, like I've told you, you have to lift the corporate wheel. First and foremost, you have to lift the corporate wheel. You don't have to go by the definition of only AS18. You have to go beyond that. You have to check whether there is any other related company or not. whether it be indirectly related. Then you have to identify whether the transactions are being done at arm's length or not. Like I've told you about circular trading. A was making B, C, D, E, F, and back to A. That was a case of a circular trading. Even though they were not directly related, they were indirectly related due to having common addresses. And hence, we verified each and every transaction and found out these transactions to be bogus and just round tripping and nothing else. So as an auditor, you have to identify whether the transaction with the promoters, related companies or indirectly related companies are done at arm's length or not. I hope this point is clear. So as you will see that we have basically covered the complete balance sheet. We have seen the debtors, we have seen the creditors, we have seen the asset, the liability side, the share capital, the profit and loss, sales and purchases. So this is the basic scope that is generally given by the banks while undertaking any forensic audit. Once you are now, second point comes regarding the forensic audit softwares. Let me tell you, the best forensic auditor software is your brain. Do not rely on any software. I'm telling you, I've undertaken more than 150 forensics. Let me tell you, I don't use any software other than Excel to undertake such audits. I've undertaken audits for 7,000 crores of companies as well. The company having outstanding balance of 7,000 crores, we have undertaken that audit only on Excel. The softwares, the CAD tools, the IDEA tools, I have knowledge of each of them, but they will just give you a data in a readable format. That is the maximum that they can do. If you will try to identify, like I've tell you, the indirectly related party, none of the software can identify such indirectly related parties. Like I've told you, accounting standards, AS 29 disclosure, AS 18, AS 10, AS 2, inventory disclosures. These softwares will just help you to bring out the format. Like if you extract the data from ERP, they will help you to bring out in an Excel format, in a readable format. But if you are doing that work in Excel, it will take you around half day more. That is the maximum it will take. But once you do your work on Excel, you will have a great understanding of the steps you are undertaking while doing the audit. The understanding that you will have while doing the work manually will be great, huge as compared to while doing through a software. So if you'll ask me, I'll tell you, do not use any software. Just have a brief basic understanding of the industry, that while undertaking any forensic audit, I'll tell you the 4 steps that you have to take. You have to have a complete detailed understanding of the industry that you're auditing. Sugar industry, iron, hotel, jewelry, software industry, telecom, aviation industry, whatever industry you are auditing, you should have a complete understanding of that industry. Secondly, you should go through the balance sheets of those companies of 5 to 6 years, complete 5, even if your period is for 3 years or 4 years. Make a comparison of the balance sheet for 5 to 7 years at least. You will have an understanding, because when the company is doing good, the company will reproduce the actual figures. But when anything bad happens, bad is going to happen, they will show manipulated figures. So if you produce a comparison of 5 to 7 years, you will come to know that what is the actual figures that the company has and what are the manipulated figures now they are producing before the banks or you. So always read the balance sheet thoroughly, go through the notes on accounts and prepare a comparative of balance sheet in Excel. Read the balance sheet thoroughly. You have to read through the figures. If a company is having sales of 100 crores and when it was doing good, it was having debtors of 20 crores. In later part, they are having sales of 100 crores but debtors of 80 crores. This clearly shows that now they are manipulating their figures because they are not recovering their debtors. If the company against a sale of 100 crores was keeping a stock of 20 crores, now it is keeping a stock of 80 crores. It means the company is not able to sell its good. So once you prepare a complete balance sheet, you will have an understanding that what the actual figures are and what are the manipulated figures. Thirdly, go through the sanction letter of the banks, because sanction letter will help you to identify what are the figures that are available and what is allowed and what is not allowed as per the sanction letter. Like some clauses in sanction letter are there that drawing power will not be allowed against related party debtors. It is mentioned in around 70% of the sanction letters that drawing power will not be allowed against related party debtors. In that case, that will come to you only if you have an understanding of debtors, sanction letter. Second example, the advance to customer will not be considered for the purpose of drawing power. Many cases, the borrower gives advance to customer and considered them as a recoverable amount and claim drawing power. Advance to customer is never allowed against drawing power. So unless and until you have an understanding, third, the debtors are allowed for 90 days, 120 days or 180 days, whatever the case may be, it depends on industry to industry. Generally for EPC, companies under EPC, the debtors are allowed up to 180 days. But for normal companies, it is allowed for 90 days. So you should have a clear-cut understanding of sanction letter. And lastly, you should compare the companies with the listed companies that are available in the market. So if you are doing an audit for any jewelry industry, you should read the figures and the annual reports of companies that are listed on stock exchanges. So if you are doing into telecommunication, you should go through Reliance Jio. Balance sheet is available on the internet. If you are doing it for aviation, you can go through SpiceJet, or you can go through Indigo, or you can go through any other. If you are into software, you can go through the Wipro, Infosys, these balance sheet you can go through. You will come to know that what is the scenario that is happening in the market and what is the recoverability ratio. I know that the companies are not comparable with respect to the size, but you will come to know about the latest government policies and the latest amendments that are being made. So like for an example, if you had heard, around 2 years back, the government of India had banned import of palm oil from Malaysia. They had banned the import of palm oil from Malaysia. That how will you come to know? If you are doing an audit for for any company and you look at the balance sheet of a listed company, you will come to know they would have stated in their balance sheet that the decrease in profit, they have an analyst call. If you see the listed companies, they have an investor presentation, they have an analyst call. In that, if you study the analyst call, you will come to know that why such reduction in profit or why such reduction in turnover. They will provide you the exact government notification why such things are happening. So I'm not talking about a particular industry. So you have to go through the listed balance sheet of the company in such industry. I hope you understand. You can use the softwares if you want, but according to me, for a better understanding to get, because ultimately whatever report you are preparing, that is to be presented before the committee of creditors and the bankers. So if you rely everything on the software, you will not have hold of the figures while giving presentation to the bankers. And the bankers are impressed if you do not look at the presentation and you just go through the report on the basis of your understanding and learning that you have done. If you ask me, if you are presenting, like if you would have seen, I have just discussed these 3 pages with you. The scope of work. These are only the 3 pages on which I have spent around 1.5 hours. I have not written anything here. Reason being, I have practical exposure to each and every point. So if you are doing your forensic audit, if you want to use the software, you can use it. But it's better if you do it manually through Excel, because then you will have an understanding of the figures that are appearing. You will have a hold of figures. And you will have a more analytical mind to identify that where the fraud might have happened, because it is very difficult to identify the fraud, let me tell you. I have discussed the scope, it is an overview, but when you will actually do a forensic audit, you will come to know how difficult it is to identify a fraud. Because nowadays the borrower are very smart, they get their pre-forensics done, they get their audits done again in order to identify what safeguards they can take. They will give you reply for each and every query. So it is very, very difficult in today's time to identify a fraud. And if you do not identify the fraud, then government agencies can catch hold of. So I hope I have been able to give you an overview on forensic audit, the scope that we give. And if you have any queries relating to forensic audit, I can take the queries, or I can discuss the scope of transaction audit as well with you.
Members, are you having any questions regarding this so far?
If any queries are there, then we
Please
can
unmute
take.
yourself and ask. Okay, sir, proceed.
Okay. So now under, like I've discussed the scope under forensic audit, similar scope is given under transaction audit under Insolvency and Bankruptcy Code of India, IBC Code 2016. According to me, it is a much wider scope than forensic audit because it has 4 sections that are to be discussed here: section 43, section 45, section 50, and section 66. Section 66 regarding fraudulent transaction is your complete forensic audit. Section 66 is your complete forensic audit. Other than the complete forensic audit, you have to report on these 3 sections as well: 43, 45, and 50. These are the 3 sections on which you have to report. What are the 3 sections? Preferential transaction, undervalued transaction, and extortionate credit transaction. Let me discuss the extortionate credit transaction first. What is that? First and foremost, you need to learn about the period of audit that is generally given. What is the period of audit? The audit under IBC is generally for 2 years prior to date of commencement of insolvency. So for an example, if your company is admitted into insolvency on 31st March 22, the period of audit generally given by the resolution professional is 2 years. That is from 1st April 20 to 31st March 22. The transactions covered under such audit are 2 years for unrelated related parties and 1 year for unrelated parties. So from 1st April 20 till 31st March 22, it will be related parties, and from 1st April 21 till 31st March 22, it will be unrelated parties. Now, what does this section tell us? Extortionate credit transaction. Under this section, we have to tell whether the borrower company has taken any loan which is extortionate as compared to the existing lenders. So for an example, there is a company A. Company A has taken a loan from State Bank of India of suppose 10 crores at a rate of 10% per annum. So what happened? The company has taken loan at 10% per annum of 10 crores. During the last 2 years, what I did, I took a loan from an NBFC. I took a loan of 5 crore rupees, but at a rate of 20% per annum. So the terms and conditions of such loan are extortionate as compared to the existing loan. They are high, they are really high, or not are prejudicial to the interest of the company. Let me word it this way. The terms and conditions of such loan are prejudicial to the interest of the company as compared to the existing loan, whereby the rate of interest is 20%. So this is called an extortionate credit transaction, and we have to mention such thing in our report. Preferential transaction. Preferential transactions are those transactions whereby preference is given over the secured creditors. Now, what does that mean? Suppose I have a loan from State Bank of India of 10 crores and I have taken unsecured loan from promoters for 5 crores. During the last 2 years, what I did, I repaid the loan from promoters of 5 crore rupees, but I have not paid the secured creditors. This is called preferential transaction, whereby preference has been given to other parties over the secured creditors. So if any preference is given, it will fall under the definition of preferential transaction. However, there is an exception under section 43(2). What is the exception? If you are paying it to the creditors who are providing you the goods in normal course of business, then it will not be considered as a preferential transaction. If you are paying for the goods in normal course of business, then it will not be considered as a preferential transaction. But if you are paying which is not in normal course of business, like you are repaying the unsecured loan or you are paying a creditor which has been outstanding for 10 years, then it will be considered as a preferential transaction. Next comes section 45, undervalued transaction. These are the transactions whereby goods have been sold at a rate which is highly undervalued. Now, what do you mean by that? Like I had given you an example of a mobile phone. whereby to related parties, the goods were being sold at 60,000 and to unrelated parties, they were being sold at 80,000. This is a scenario of undervalued transaction whereby goods are being sold at a rate lower than the rate at which it should have been sold. Means the goods are not being sold at arm's length transaction. Then it is called as an undervalued transaction and are to be reported under section 45. So these are the transactions, section 43, 45, 50 and 66, under which you have to report all the transaction as per the IBC code, Insolvency and Bankruptcy Code of India. So these are the general scope of work as per the IBC. Then rest of the details I have already discussed regarding fictitious revenue, improper asset valuation, concealed liabilities and expenses, improper disclosure, accounting standard disclosures, then accepting, planning, assignment, executing. I've told you court proceedings. So everything has been discussed with you. If you have any queries, this is the fraud triangle that I'm showing whistleblower. So now if you have any queries, then we can take the queries on, or we can close the session as the case may be.
Hello.
Yeah.
Hello.
Yes, sir. Yes, sir.
Yeah. Congratulations, dear Rahul ji. You have presented excellent and nice presentation. The language is very clear and you have covered all the industries also. I expect our institute to give more and more programs to you, sir. Thank you.
Thank you. Thank you, sir. Actually, I was involved in the committee for FAIS as well, Forensic Accounting and Investigation Standard as well. But they were more sort of theoretical, so I opted out of it. So, but you can go through the forensic audit standards as well, but they are very theoretical in nature. So unless and until you have a practical overview by doing any assignment, you will not be able to understand what is written in those standards because they are very, very theoretical in nature.
Sir, whether this presentation can be shared with us?
Yeah, sure. I'll share it with the chairman, sir. Then he can share with all the participants, sir.
Okay, thank you, sir.
Members, please ask any clarification or any doubt. Please unmute yourself and ask, sir. Because such an expert is with us, so we can get the clarification. Members, please utilize this opportunity because the face-to-face we can ask and get the clarification. Any doubt or anything, you can just ask him, unmute yourself and ask him. So he will clarify.
I am also available on mobile phone or email ID. You can send me your email or WhatsApp. I'll reply to all your queries if you have any regarding any forensic audit assignments or anything you have, or even if regarding Caro, because I take a lot of seminars on Caro as well. So if you have any queries on the statutory audit or forensic audit, you can share your queries with me, no issues.
Sir, what is the source to understand the controls in the company and functionings of each department of the system enterprises?
Like I told you, sir, first and foremost is that you need to have an understanding of the industry that you are auditing.
Yes, sir.
So unless and until you have an understanding of the industry, you will never be able to undertake that audit. Like I've told you that in manufacturing, you need to have that the company is actually booking a power and fuel expense. If your company is into manufacturing and they are not even booking electricity expenses, it means they are just oversetting their balance sheet and nothing else. So once you do an audit, you will automatically come, you will go through that audit, you will go through that industry, you will come to know about what checks you have to keep. The financial aspect is the second part. First is the industry aspect that you need to understand about the industry. Like jewelry, I told you, mobile phones, hotel, service industry. Unless and until you, like I'll tell you a case of EPC contract. I was doing an audit for a company which was developing roads. So first day when I visited the company, the management, the directors, they were there. They showed me all the bills. Sir, we have all the RA bills. We have all the engineer certificates showing that road has been prepared. This much has been spent. I never asked them. I never seen even a single document because I know I will never be able to question what they have put in the inside the road or not. Because I am not an engineer. I'm a chartered accountant. And in today's scenario, sitting here whereby the road has been completed, I cannot verify whether the amount of cement or blocks that they are saying they have put in the road. I can never verify that. So in that case, you need not waste your time in verifying the bills. You can just verify on a sample basis. What you have to question is in EPC contract, you have to question the project cost. Because it is the project cost which is always overstated in EPC. You can see it at any EPC contract because in EPC contract, the project is always subcontracted to some other party on same terms and conditions on which it has been taken from NHA or any other government agency. Wherever there is subcontracting, you will come to know their promoter contribution is zero in that case because the project cost is already overstated. So if you are doing an EPC contract, you can verify the bills on sample basis, but you will never be able to verify the arm's length nature of that. You have to question the project cost. Similarly, in hotel industry, if you will go and verify the laundry expenses, the consumables, the restaurant bill, you will never be able to find anything. You have to hit on the sales part, the reception area you have to hit. Where is the major revenue? So it is always dependent on industry specific that you are doing, sir.
Yes, sir. In order to understand those things, first we have to understand the functioning of the system and controls in that system.
Yeah.
Whether any better source to gain the knowledge of industry and the functionings of the industry.
No, so practical knowledge. It is a practical knowledge you have to take. I'll tell you, if you are doing a statutory audit, even for a small company, you try to put all these checks in even your statutory audit itself. You will get a good understanding of the systems. But there is no written anywhere it is written. Like I have understanding of these industries. How did I get? I did forensic audit for over 150 companies. Then only I got this understanding. Because I guess I am quite younger to you. I started my forensic audit practice in 2015. So ultimately, if you are doing practically those work, you started from your companies for which you are doing statutory audit. If you are doing a company dealing in trading, you question them the profit that they are booking. You check their how the sales are being made, how purchases are being made, whether proper documentation is being maintained by them or not. So all those things will start from your statutory audit or a normal audit. Then you will be able to gain experience while doing audit for a bigger company, sir.
Yes, sir. Thank you.
Welcome, sir.
Members, please. Any other members, please, any type of clarification or any doubt? Okay, sir, Rahul Jindal ji, really, we are very grateful to you and we are indebted to you. Really, you are very kind enough and you have given the time and within short notice you have accepted it. Really, we are thankful to you, sir. Now I request our Anwar Sridhar garu to propose vote of thanks. Sridhar.
Yeah. Good evening, sir. Good evening, members, respected chairman, senior members, past chairman of the branch, and members from the industry and profession. A very good evening to all of you. On behalf of the managing committee and members of the Visakhapatnam branch, I express my profound thanks from the bottom of my heart. Jindal sir, your excellent deliberations on the topic with practical insights into various industries, whether it's manufacturing industry, trading, or jewelry, or whatever, you name any industry, have given from each sector the live example how the various topics from the point of view of forensic audit fraud detection view. The deliberations were immensely helpful for all the members in the practice, particularly for those members who are looking for career growth in this new upcoming area. I thank all the members present here for making this event grand success. All the members a request for the national to raise for the national anthem.
Thank you, sir. Thank you, everyone. Thank you, sir.
And a particular note for these upcoming programs, members, please note that there will be a virtual program on this 28th May on the topic of intricacies and recent developments on TDS and TCS by CA Harit Dhatiwal from 5 to 7 p.m. And from the next week, from 23rd May to 28th May, there will be GST Saptah on various topics of GST by eminent speakers from across India. Please mark your calendars. Thank you, members. Over to Chairman.
Thank you, Sridhar. Thank you, Rahul ji.
Thank you, sir.
See, for summer physical seminars with
Sure, sir. Anytime, sir. Thank you, everyone. Thank you.
Thank you. Because really, your deliberations are very excellent, sir.
Energetic also.
Practically.
Very energetic.
Because industry-wise you have explained in, and it will be better understanding by our members about these topics.
Sure, sir. Anytime, sir.
Thank you.
Thank you, sir.
Thanks a lot.
Thank you.